Dale, thank you for your patience. I'm now promoting you to panelist, and I'm going to unmute you. Look forward to hearing your screen. You're unmuted. Welcome to F.A.C.E, Dale Durchholz.
Yeah, it's not often I get to talk to somebody else by the name of Dale.
Yeah, let me ask you something, Dale. Did you get teased as a youngster about having a girl's name?
Gee, what was your first clue?
Huh?
What was your
Dale Evans, Roy Rogers.
Oh, yeah.
Huh?
I mean, that was a persistence. And the odd thing about it, I grew up in Central Illinois, my dad was a farmer, grew up in a small farm community. And in my class, there were 5 other boys by the name of Dale.
Oh, my goodness. So I have an agricultural based name.
Oh, I guess.
Right? I don't know.
Dale.
Anyway, great to meet you, Dale, because I've been following you on Twitter for years, and being from Chicago, I had a lot of friends at the Board of Trade, and I always loved trading grains because they were great technical markets, and always had an interest in them, and admired people in agriculture because it takes a lot of courage to have the faith to put a seed in the ground and hope you get the weather, and hope you have a good harvest, and then hope market conditions are good. A lot of hoping so that you can make a profit for your labor. So in fact, when I was a cynical commodities broker a long time ago, Dale, I would say my life is like a farmer, up before sunrise, asleep after sundown, except that I nurtured seeds of greed for the harvest of commissions.
You know, it was funny. This would be about 10, 12 years ago. And I live about 50, 60 miles from where I grew up, not by design, because if I had a place that I would like to live, it'd be Kalispell, Montana, but career kept me in the Midwest.
Okay.
Went to see my father, and it was late afternoon, about 5, and walked in, and he said, "You look tired." And I said, "Dad, let me tell you about my day." Then again, he's an old farmer.
Yeah.
I said, I get up in the morning at about
4.
6. Huh?
Oh, at 6?
I get up at 6 and I retired back at the end of June. And do some consulting stuff on the side now. But I said I get up at 6 and I see what the market's doing. I go through news wires, and I eventually have some breakfast, shower, go to the office, get in about 9, spend all day, get done about 6, go home. And when I get home, walk in, say hi to the wife and play with the dog and whatever. And I said, then I look to see what the markets are doing. And he said, look to see what the markets were doing, because he was not aware of the fact that we were trading 24 hours a day.
Oh, yeah. That changed everything. Yeah.
I recounted the whole schedule to him of trading at that time. And he said, how do you sleep at night? And I said, it's easy. You just go to bed and you go to sleep. I said, that's all there is to it. What happens, happens, and you get up the next day.
Yeah, that was my big adjustment with FX, because that's 24/6.
Yeah.
I didn't know that the grains. I know we had an aftermarket. They're not that active though, are they? Except maybe now they are with the tape bombs about trade wars. I wanted to let you know, Dale, that if you just scroll your mouse over the top of the drop-down menu or the bottom, you'll see a green box that says share. And then you can share your screen, because I know you prepared some things for our community today. You see it?
Yeah, it says share screen, right?
Right. So click it and take it.
There we go.
There we go. Okay. All right. So, usually I start off, I ask people, how they got in the business. With yours, it was a genetic thing. So, I know how you got in. A lot of people that grew up on farms, I don't care if it was cotton or grain or whatever, had a natural inclination to seeing how markets moved up and down, and wanted to learn about it and how to capitalize on it. So why don't you tell us about early in your career, when you started in say, for example, trading? Were you out there prospecting hedging accounts? Because that's really why the markets were developed.
You know, I'll go back and start when I was roughly an undergrad, grad school. I did a stint at the University of Illinois, got my undergrad there, but I went back there and I looked at about 5 specific universities, ended up going back to the University of Illinois to get an MBA.
Okay.
And I was specifically wanting a college that had a good business program, number one. Number two, one that also had a strong ag department, particular ag econ. At the University of Illinois at the time, the primary professor in ag econ was Tom Hieronymus, who wrote one of the mainstays of books for the commodity industry itself. So that was
right.
my first taste, and I got a chance in grad school. I did some independent study with him as well. So
obviously you didn't care what kind of football team the college had.
Obviously I didn't. There have been,
you know, I mean, I've been down there, and I love the Fighting Illini, and we're from the same state. Only I went to commuter school. I went to school in DeKalb, but
you went to Northern?
Northern. Little did I know when I was driving back and forth in the cornfields that I was going to become a commodity trader. It was the last thing on my mind. So you got all this formal training in agriculture. Did it help you to become a trader?
Well, it really did, some things there, because when you're in college, and specifically when I was doing independent study with Tom, I got really immersed in some different fundamental things that go on in the marketplace itself, and from there I went out to was lucky enough to graduate with a degree at a time when the economy sucked. That was 1974, 75. And,
we're the same age, buddy. That's when I graduated college. Well, we're around the same age. That was
from grad school. I was
okay. So you're the only guy I've interviewed in a long time that's older than me.
With the same name.
Yeah. Okay. So, no. Yeah. Okay. So.
But I went to work with a producer consulting firm in Iowa, and we basically worked directly with farmers. And again, this is 1975, helping them, cope with the volatility in the market at that point. And for those out there that don't know the history of the grains, 1972, 73, the great grain robbery, when Russians bought massive amounts of crops from us here. 1973 was the great soybean rally, in which we touched actually $12.90 back in the summer of 73 in July futures. And
so that's where the chant beans in the teens, it took what, another 20, 30 years to manifest?
Oh, yeah.
Yeah, beans in the teens.
And I've actually even got a T-shirt a friend of mine gave me at my wedding in 1983 that said beans in the teens.
Yeah.
And at the back it said someday.
Yeah. Okay.
Yes. And we finally got there.
Okay.
But in any case, a lot of volatility. I was working with farmers really as on a consulting capacity, not doing trading. And from there, it was either 79 or 80. I went to Chicago. I worked with 2 mid-sized commodity houses, which at that point, as you know, if you spend time, there was a lot of medium-sized commodity houses, as well as a handful of big behemoths, basically the wire service houses like Merrill and some of those.
Right.
So I did spent time then for 8 to 10 years doing mainly research, mostly in the grains, did it in the meats. Ironically enough, my background and experience and everything was in the grain markets. But the commodity houses I work with, one of the guys wrote the pork belly contract, and another guy I worked with, his company, he was part of the writing of the live cattle futures contract. So
who wrote the belly contract? Because I know Sid Madoff was really big in the belly.
That's who I worked with and worked for.
Oh, you know what? That was my first job as a registered rep at Madoff and Sons.
Really?
We probably met each other. Yeah, I was Above Union Station, I traded upstairs.
Oh yeah. Wait, what years were you there?
75, 76, 77. And then I moved out west. I figured if I'm going to be
Okay,
off the floor.
you would
Yeah.
have left right before I arrived.
Okay. All
Well,
right.
then, if you knew Sid and
Yeah.
you worked out of that office, you would have known Maury Schneider.
Oh, yeah. And his son, Larry. This is like
Yes.
old home week. Yeah. Maury was at the Dean Witter desk when I was a runner, and John Greco would give him orders to go
Ah,
fill. How about that?
old names. Anyway,
Yeah. All right.
Maury passed away. Maury passed away about
Yeah.
maybe 3 years ago,
Yeah.
and he was still trading.
I talked to his son. Yeah, he told me about it.
Yeah.
So, God, it's like a reunion day on F.A.C.E for me today. So, okay, this is history, and we're from about the same era. And Russia was the big player then in grains. They've been replaced, right, by Russia because by China, because I remember interviewing the goddess of grain, Angie Setzer.
Angie. Yeah.
Yeah, and Angie was saying the Chinese have been stockpiling wheat big time for years. Do you think they saw the way they planned things, a potential trade war coming down the pike, and that's why they started hoarding, besides gold that you can't eat, wheat?
Well, now China is kind of a different story in that regard. I don't think it's so much a game of story. And part of the stockpiling of the wheat had to do with all the evolution of the last 15 to 20 years of their
Diet.
ag programs and economic policies in China and what they were doing in wheat and corn and even in rice, which are the three mainstay crops that they produce. They're a small potato producer in soybeans.
Okay.
But those three, they had what I would call artificially, or maybe we could say unusually high prices for those particular commodities they paid to producers. And really the reason they were paying high prices to producers was to slow the movement migration of people from the rural communities to the cities themselves. They were trying to manage that migration of people, so they were paying high prices to sustain some profitability.
Mm-hmm.
The downside of that is that farmers, as you know, you get paid good money, you produce a lot. And so they were producing more of those three particular items than they were consuming. The same thing happened actually back in the 1990s. They had built huge inventories of corn and wheat in particular through the 90s, in which case right at the end of 90s, early 2000s, they liquidated those only to start that over again. But today, as it is, China controls roughly half of the world wheat inventories at the end of the marketing year. So,
wow,
they have been stockpiling, but it wasn't because they were seeing something unfold in commodity prices. It wasn't because they were seeing something happen to where shortages could loom. But to a small degree, a background factor in part of that as well actually ties in and has to do with the fact we're talking about a country that's known famine. And
okay.
so they have a desire from a political point of view to maintain reasonable inventories of foods. Basically, I don't want 1.3 billion people to get angry if I'm in the government.
Right. So
And
they were, yeah, they were, because they lived through that, they were scarred by it, just like maybe our grandparents were by the Depression, and they became ultimate savers and hoarders and didn't want to held on to their last dime because they knew you could have a rainy day, and yeah, so that's interesting. Yeah, we've never had famine here in the U.S.
We really haven't. The closest we've had would be the 1930s.
Okay.
Closest.
Dust Bowl?
Excuse me?
Dust Bowl?
Oh, yeah.
Okay.
Bowl.
So I see by your handle, and it's a new handle since you retired. How was your retirement dinner?
Actually, I retired at the end of June, and I promised myself, people kept asking me what I was going to do, and I said, for 2-3 weeks, nothing.
Yeah.
And I thought that was important. I wanted to wind down a little bit from getting away from a day-to-day grind and kind of relax. I had a lot of things. I live outside of Bloomington Normal.
Okay.
For those listeners out there, Bloomington Normal is the home of State Farm Insurance.
And Illinois State.
Oh yeah, I had a lot of work to do in my yard because I have about 1.5 acres that's built on an old piece of virgin timber.
Yeah. Okay.
So
So in your new handle, which I find, I like grain, but the interesting part to me after underscore is cycles, because guys like you and I have seen a few, right? So, and we know everything is cyclical. And, the big deal for when I was strictly a commodity broker were weather cycles, La Nina, El Nino. You prepared it. I don't want to get ahead of what you prepared, but tell us about the cycle we're living in now.
The one thing here, and let's back up and just go to, if I can.
Yeah, you could just click it. It should change. There you go. Okay, we have the monthly continuous CRB.
Commodity index. That used to be called the CRB index.
Right.
And so Reuters bought it in 2005 and changed the way it was compiled, but they continued on the way it used to be compiled, which is the continuous commodity index, which I think is probably still the better one, but it's got a history that goes all the way back into the late 1940s.
Okay.
So it's a good long-term thing. You'll see there at the beginning over on the left-hand side, the push we had there in the 70s, that was when commodities rose rapidly in 1972, 73, 74. And that was basically the beginning of the inflation spiral we had back in the 70s.
That was the win buttons, whip inflation now?
Yep.
Okay.
When you go back and you look at this, there's a long history of having if you want to get big, a 27-year cycle, low to low, and all cycles are counted low to low. And you can even push it out to a 54-year cycle, which interestingly enough ties in pretty closely with, you probably read about the Kondratiev cycle.
Yes.
That guy, a Russian economist, had found 60 years. But, when you look at a long cycle, basically you start talking about a margin of error or a window of opportunity that's roughly about 15% either side of your projected date, maybe get it down to about 10%. So you look at that 54-year cycle, it ties to the 60, but breaks down into 27s, which you can watch, which also breaks down into 9s, and even the CRB itself, or the continuous commodity index here, breaks down into 3-year. And what you see here,
there's that number 3 again.
Oh, yeah, lots of time.
To me, number 3 is the number of completion. I trade a lot of 3-drive formations. So anyway, that's interesting that it breaks.
You're an Elliott wave person then?
No, I just learned that from J.R. Hill in the 70s, and it just started noticing how the number 3 came up in a lot of things that we're completing, third time's the charm, third planet from the sun, a lot of 3, 3 strikes, you're out. A lot of 3s out there, Dale.
Oh, 3s and 7s.
Yes.
That's also goes back as an old technician once told me, and this guy was Jewish, a great friend of mine.
Yeah.
And in the Bible, the numbers 3 and 7 are the most mentioned.
Huh. Okay. Who was it?
Mike Goldman.
Okay.
He used to have a seat on the old Mid-America Commodity Exchange.
Oh, sure, where they traded minis.
Right. He actually grew up in the cotton business. His dad was did something with cotton, and I don't remember what when he was a kid. So he grew up in the commodity business too, but he was purely a technician. And He taught me a lot, never would teach me some of the secret details of what he did. But as I found out through the years, he used a lot of cyclic parameters, and he also was an Elliott wave person. And the reason I ask you about if you were an Elliott wave person is that, in a bull market or in a bear market, many times you have three distinct moves up that unfolds in a 5-wave pattern in Elliott wave.
Okay.
And there are also a lot of corrections.
I know enough Elliott to be dangerous.
But
okay.
What I do today, a lot of it, I look at technically simplistic bar chart patterns. I look at some basic indicators like stochastics and RSI, and I look at some MACDs. But I rely a lot on cycles because they give me timing. Right. And I rely a lot on Elliott waves because that can generate some price targets for moves up or down, either one. So I found it to be a good combination. And then I'm still basically a fundamentalist. So I'm kind of an unusual animal, you might say, when I look at commodities, because I'm a little bit of a number cruncher and a little bit of a picture observer to see what's going on. But notice here where the key is on this graphic. That was the last time we had a major low in the commodity indices. That was a 9-year low, also a 27-year low back there in 1968. We actually stretched that cycle a little bit. We bottomed it in 1999, but the interesting twist and looking forward for everybody out there is that the next 27-year low is due in the middle 2020s. And when you start thinking about this, there's a lot of reason to think that what we're going through in commodities in general right now is potentially a lot like what you and I went through in the 1980s and into the 1990s. So, I'm looking ahead. I see basically not a day-to-day, week-to-week, or even month-to-month, bearish market, but I see a longer-term trend that, we passed the major peak in 2012, like the one we passed back there in 1980. So I'm always looking.
1980 was a peak in gold too, when Russia invaded Afghanistan and Maury Kravitz ran the gold pit at the IMM. And then the peak you have at 2011, 2012 was the last gold peak at 1900. So you've seen a lot of tie-in with gold and grain prices and the whole commodity complex.
And you see a lot of that tie coming in crude oil too. If you look at some of that, there's another thing here, and if you look on down here, and we'll go into this, which is a graphic I ran across here recently, which was interesting. I've got other looks at it, but this is the dollar itself, and looking at the dollar index. And what you'll notice here over in the, again, the far left, we had a hard break in the dollar when we took the dollar off the gold standard. That was also part of the big commodity rally we had in the middle 1970s. And the dollar itself stayed weak all the way into 1980, which goes hand in hand with bullish commodity prices, bullish gold, bullish crude oil, and everything of that ilk. And then came Paul Volcker.
Yes, the liquidator.
Interest rates took off like a scalded rabbit.
People wouldn't believe it, Dale. What was the T-bill, 90-day T-bill trading at in 1980 when Volcker started raising rates? Do you remember?
All I know is that we were well into the double digits, but I don't remember the high.
Yeah, I think around 18%.
Yeah.
Yeah, up there. People were getting mortgages. I think their mortgages were 17-18% to buy real estate back then.
Oh yeah, people today worry about 30-year mortgages getting up 4% and they're too high, and I go, you haven't seen anything.
Yeah, we're at 300-year lows in rates, or maybe even 3,000-year low in rates. So your dollar chart, it looks to me, I'm just guessing, is that the dollar came out of this triangle. Looks like a year or so, and tested it on a pullback towards that 87 level or 84, and is the wave, the purple line, the wave of potential peak that'll be coming up in April of 2021?
It is, but the only thing, we don't have a lot of history here in this because
Okay.
the dollar hasn't been freely traded for enough years to make any sense out of. The only thing I really come back and see when you look at, the peak we had back there in the late 60s, and then we had one again in 85, and then we had the one in 02. You got about a 16 to 17 year pattern high to high, which I don't like to deal with because highs in markets aren't as regular as lows. But
Interesting.
considering our last high was in 02 and you go 17 years out is 2019. So I'm really watching, how this thing performs here over the next number of months. Do we take out that small peak we put in 2017 yet, or have we
Or is it over?
out of gas, and are we going to end up in Elliott wave terms having what I'll call a failed fifth wave, in which we actually don't see the fifth wave make a new high, which ultimately is real bearish. But in any case,
rare. What they call that, truncated?
Yeah, it is rare. It doesn't happen, but when they do, they're real negative. But the point I put the dollar chart up here for, and also there's another couple here that I put up. There's the Brazilian real and the Argentine peso. And the grains, I don't look at the dollar so much itself because the dollar is too heavily tied to the euro. About 60% of a trade-weighted dollar is tied to European currencies of some ilk.
So you go to South American producers and look at their currencies. They give you cues?
Yeah, they do. There are different things, but there are four I look at: the real, the peso. I look at the Russian ruble because they're such a big commodity player today. Russia.
Okay.
Think about it. Well, when we got in the business, the great grain robbery, they were the number one wheat importer in the world. Today, they're the number one wheat exporter in the world. So the ruble has huge importance. And the crude oil, the ruble has huge importance. And the fourth one I watch is the Chinese yuan. But to step back and show you the importance, here's looking at soybean futures priced in Brazilian real. So we've been in somewhat of a bearish market here as far as soybean prices are concerned, going back to 2013, 2014. But when you put the real in the mix, the Brazilian producer and even the Argentine producer have seen prices go to new highs.
Because of currency weakness.
With that, you are seeing continued incentive to expand production in South America. And that relates back into some fundamentals that you go to here when you look at available land. If you go into Latin America, we have about 300 million hectares. But when you look at sub-Saharan Africa, which is the one I think long-term people need to be watching for, we've got over 500 million potential hectares of land that can come into production. Here in the U.S., we actively crop.
They have water there?
Sub-Saharan Africa, you do.
Okay. Interesting.
I mean, that's where we get a lot of cocoa and coffee. And
Ivory Coast. All right.
Right.
Got it.
It's basically south of the Sahara. It's Africa, if you look at think geographically at where it starts to get constricted as far as size, just south of the Sahara. That's where we think of, the great migration patterns of the wildlife there, but they have a savanna climate. But when you step back and think about it, that's really the area in Brazil where we're raising corn and soybeans. So we have a savanna climate. So they've got huge potential there, and their land mass eclipses by a large measure what's available in South America yet. By nature, when you look at the United States, 1 acre is about 2.5 hectares, and we farm about a little over 300 million acres here in the U.S. So, if you start talking about that, you're talking about here in the U.S., we're actively producing on about 120, 150 million hectares.
Okay.
So you're looking at huge available land mass, and that's where people in agriculture have to watch. And right now it's the watches in South America. what happens down there. We started back in the middle 1990s. This was after the Russian embargo, and then we had some other issues that came into play in the 1990s. They really started to aggressively expand production in South America, and that hasn't stopped yet. And it's still underway. And now, you know, of recent, we've had this Chinese trade war, and their prices tend, on average, to command a little bit higher price than out of the U.S. because of the negative drag in soybeans in particular. Of the tariff on U.S. beans. So they're continuing to see that incentive to expand stuff. You know, so it's going to be a landmass change, but to give people a history of the fact that you really step back and you go, you know, the same thing happened here in the United States. And you would remember back in the 1970s, it was plant fence row to fence row when Earl Butz was Secretary of Agriculture, you know, and we expanded our land area under cultivation quite rapidly. The only thing that's going on now is that we're doing this in South America. We're also doing it with the markets being freed up over in Russia and Black Sea area. We're expanding production over there rapidly too. So we're seeing the world outside of the U.S. and even outside of China really expand their production capabilities. And that's going to be a problem for U.S. agriculture and U.S. prices going forward, I think. You know, when you look at some things today, as you know, we have a huge report coming today. We've got a USDA crop report coming out here in about 2.5 hours. We'll get our taste of...
well, the Duke brothers have a big bet on OJ.
Great movie.
Remember that line? Turn the machines back on.
Yeah.
Yeah. All right. Anyway,
I tell you, people in the trading business love that movie. It was done.
The bathroom scenes were pretty realistic. Anyway, so we have a big crop report, and what are you looking for?
You know, this one's unusual compared to a lot of August crop reports. We actually, as you'd remember, we start the cycle now of going through the late summer, fall reports from the USDA telling us about what the production potential is out there. But because of the weather we had this spring, and, you know, some of your listeners may or may not remember, we had one of the worst springs we've had on record. I thought after going through the floods of '93, I'd seen the worst of a wet spring summer that I would ever see. And this one was even worse. And we had, you know, a lot of corn that was planted in June, beans in June, beginning of July. So, you know, you really planted extraordinarily late. And right now we've got crops in terms of developmental stages that are probably, I'm going to say on average, roughly about 2 weeks behind. And that's critical because that says, you know, to get full development of the crops themselves, you need to have a late fall and have those initial frosts and cold waves come later than normal to give the crop time to develop. But today we got a report coming out. You know, here you see the black line, you know, that's U.S. yields. I have a bit of a different look at trend on yields on the grains. And it's one that a lot of people look at and they go, that is interesting. And you see it even in South American production as well. But beans tend to on yield go up in stair-step fashions. They aren't as much of a linear trend as shown there in red. Okay. But right now, you know, you've got people thinking we're going to have a bean estimate coming out from the USDA on yield that's going to be about 48, 47 bushels to the acre. In corn, a lot of people seem to be about the middle 160s, which would put us roughly down to the trend that I use, maybe just a little bit underneath it at this juncture, but unusual for the August report. Probably the thing people are most waiting for, most wanting to see, really is what are the acreage numbers here? Because we had a report at the end of June and we were still planting the crop, and that report got a lot of derision out of people in the trade because of the numbers they put out. The USDA did 80 million acres of beans, which didn't shock people, but 91.7 million on corn did shock people, a lot bigger than they thought. So a lot of people have been suspicious of those numbers. So we're really looking to see what the USDA releases as acreage today because they went in and they resurveyed 14 states in the Midwest, and that's huge. We also get at the same time from another government agency underneath the USDA, the Farm Service Administration, at 11 o'clock, we'll get a report on the numbers of acres put in farm program, which also tells us acres of corn, acres of beans, understanding, we have a lot of land that is farmed outside of government programs, but the important one is everybody's looking to see what that prevent plant number is, because with crop insurance policies that farmers have today, if it gets so late, they can take what's called the prevent plant claim. And what they do is collect 55 or 60% of an insurance guarantee and just have to sow the field to a cover crop. They'll never plant it to corn or beans or wheat or whatever the case may be. So people are really looking for that prevent plant number to see how high it is and see if all these acres fit in the matrix. Right now, I'm still thinking that, the acreage number is going to come down a little bit. I'm roughly around 89 million on corn. The trade seems to be just around that level. It seems when I looked at the trade averages. The beans, I'm a little different. A lot of people don't think we'll see any growth in beans. They're staying somewhere around 80, but I think we could see it upwards of maybe 82 million on beans. And the reason when we get so late, if it's too late to plant corn, whether it's from the calendar or it has to do with the insurance policy details, you can still rotate in the heart of the Midwest, as that land over into soybeans. So I think soybean acres will be up a little bit in here from where the USDA predicted roughly a month and a half ago. But right now, big news coming at 11 today and a lot of volatility. Will it set a bottom or not? You tell me the report, because you were through the grinder in the grain markets. USDA reports always have surprises, and you never know which way they're going to come.
Yeah, so do you stay flat and then react to the reaction of big reports like that?
I tend to, with this report, we've had a pretty good break in both corn and soybean prices now since the flood worries wore off back in middle of June, that you really question, can we have much of a bearish report? But at the same point, I'm sitting here today, Central Illinois, we had about an inch rain last night. It wasn't universal over the whole state, but we got another frontal system coming through today. And somebody says, I don't know if this is $1 million rain, but yeah, I think it is a real important rain, and it's hitting a lot of areas. So we're going to give the crops a real good drink of water. Still going to be deficient, but it says, I live to fight another day as far as the plant is concerned. So I think the weather's a little bit of a negative. So I don't know that we have a real big bullish reaction. And in fact, going back to timing, here just to talk about it. Let's go to corn for, this is this long haul. I look at a couple of cycles. One's 5.5 years in corn. Another one's, we can roughly say 2 years, and you can see those lows counted out there.
Yeah.
The 5.5 year bottom back there at late 2014. So it's due in 2020. The 2 year cycle actually bottomed back in 18, at the end of 18. So that puts us out into 2020 as well. But in the short term, there's another cycle in corn. I don't have that to show on a graphic of 40 weeks. It also breaks down into a 20 week, and that one will break down either into 2 10s or 3 6 to 7s. But those lows out there really are due somewhere right at the early or middle part of September. So I tend to think the market's going to be sideways with potentially a lower bias if my timing counts are right. Doesn't mean we have a hard break, but it just says I don't think the odds are in favor of seeing much of a rally. If we back up and look at beans, you have, as well as those 9 year cycles, you have a 36 to 39 months, so let's just say 3 year cycle. That bottomed actually at the end of 18, although this recent low here at the beginning of summer may count, but I tend to think the older one will be better. Now, there's also a 2-year cycle in beans that tends to rattle through here as well. So I think we've got lows behind us in corn and beans, but in the beans, like the corn, I've got a shorter term cycle that's 32 weeks in length, and that's due somewhere around the end of August. So I see some short term cyclic things suggesting continued general weakness. Cycles only tell you time, they don't tell you price. And I think people need to always be important and aware of that distinction in looking at markets, and not to get hung up that I have to have a major low because I've got a cycle low to do. The only time you tend to see those major lows is when you have a confluence of a lot of the other cycles come into the mix here. So the report today, I don't think it's bearish because we've hit the market so hard, or I don't think we'll see much of a bearish reaction. I think the weather works against it some. But even if the report's bullish, I don't think we have any more than what I'm going to say, some kind of a recovery off the break we've had since back in the early part of summer. So
I'm going to ask you to put on your Nostra Durchholz hat and tell me what you're going to be stalking and monitoring for the remainder of the year. Are you leaning towards a culmination and confluence of major lows coming into the grain markets that over the next 6 months or so that would put you in an accumulation mode to have your toe in the water on the long side?
I think, when I look at the next 6 months, my point is being potentially a little patient, assuming I don't get any real huge shocks here today. And looking at those shorter term lows here, let's say coming somewhere around Labor Day. Okay. And at that point, I would be looking for that opportunity, looking for the sign to start to accumulate some long positions. And the real reason I come back at this, I go back to 1993 as somewhat of a guideline, corn in particular. It's the realization as we go through time that the crop isn't as good as we thought. And I don't know that the yields, unless they give us some kind of a huge yield today, are going to go down a lot. For example, my trend yield on corn that I use is somewhere up around it's around 172. The USDA is already at 166. Their trend yield is that they use is up around 176.7, and we're already at 166, and I think that's roughly where we're going to end here today, or show here today on corn yield.
Okay.
But in 1993, the first report we had on crop production, official report in August of 93, was on corn, 116 bushel on yield, and we ended up at 102. And I think as we see the combines roll, we're going to find that unless weather is just absolutely fantastic and frost is delayed extraordinarily late, that yield isn't there. The big thing I'm watching when you look at some of the fundamentals, every Monday the USDA puts out a weekly crop condition report. I'm not so much looking at the condition of the crop itself, that at the same time they also put out numbers on progress. In other words, in corn, how much is pollinated. Then we go into how much is in dough stage, where we fill out those kernels, and how much is in dent stage, and eventually what percent of the crop is mature. I think those progress numbers, because we planted so late, are really important. And as long as they don't catch up significantly, it puts really at risk the back end, because if you get a frost freeze that comes in about normal, you truncate the back end of the growing season, and you truncate the yield potential of the corn, as well as diminish the quality in some fields. So,
Okay.
I'm really looking to be an accumulator, thinking somewhere at these lows we get right at the end of August, probably into early September.
Okay, what a great presentation. I learned so much from you today, Dale. And I know you're retired. Are you providing any kind of service, or are you just going to be doing your own thing in the markets and just have a few private clients? The best way for people to follow your work is it Twitter at
Grain cycles?
Yeah, underscore, grain
Right,
underscore cycles. Is that the best way?
Right now, that is. I'm still haven't got totally ramped up yet. I'm putting together a website on WordPress.
Okay.
It'll be tied back to my Twitter feed as it is. I'm not going to get into this routine of doing things daily. I'm going to tend to do things more of a big picture, but I'm still going to be looking at markets both as a fundamental and as a technician. I'm going to look at it from a cyclic perspective and see what that tells me about the market. So I'm going to do some speaking. In fact, I got a speech set up for the end of August in Chicago itself with a bunch of Brazilians. Going to be doing some speaking, working with a group out of Indianapolis, and going to be doing some private consulting and thing. But people can always reach me at my email or message me back on Twitter at Grain Cycles. But here soon, I'll have the website set up.
Well, you know, you're my trading warrior brother now, like it or not, right?
Yeah.
Okay. And you know what? In your retirement here, Dale, I hope that everything you touch is a bumper crop for you, and that you enjoy these years, and wish you a lot of success in spreading a lifetime full of wisdom to people that are just familiarizing themselves with one of the most important sectors of our economy, because every day that we sit down at our dinner table, it's the hard work that you and your family and other farmers across the country have put in for us to have sustenance. So, you know, may every crop you plant be a bumper crop, Dale.
I'll tell you this, getting away from the day-to-day grind, though, has been real relaxing.
Yeah, smell the roses, bro.
I thoroughly enjoy not having to get up and do the grind. I tend to read news wires. And
looks like you're taking to it like a fish in water. Some people can't adjust. I planned my retirement slumping over on my keyboard. All right, Dale. So really a pleasure meeting you. What a great primer for people that are interested in things outside of currencies, and even covered we should be aware of what happens with the dollar here, whether we get a continuation or a truncated fifth. Excellent interview, my friend. Thank you so much for edifying F.A.C.E.
Hey, it's been good talking to you there. I've enjoyed it today, and we got to revisit some old times.
Yeah, wait, I'll put my time machine away now.
Oh, by the way, you would like to know the Merck is thinking about reviving the pork belly contract.
Oh, my goodness. Well, good.
Seriously.
Because every exchange floor is turned into a bowling alley. I would love to see open outcry come back. That won't happen.
The issue with pork bellies is the amount of bellies we're using now day to day, and the service companies, and they have no vehicle to try to guarantee their price or to hedge their price at all, long or short side, either one. So there's a real huge interest.
That was my first day at the Merck in the gallery. I saw Bellies Go Fast Market with Bill Henner and Harry the Hat and all those guys down there. So there's a flash from the past for you too, Dale. Thank you, buddy.
Good talking to you.
All right, everyone. That's Dale Durchholz, and you could follow him at grain_cycles. And really important for you to pay attention to this sector, because if you like to eat, you're going to want to know what's going on there. So thank you, Dale. That's a wrap for us. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. See you tomorrow. I have Jamie Satley coming in tomorrow. He said buy TLT at 124, traded as high as 143. Talk to you later, everyone. Adios. Thanks, Dale.
Thank you. Talk to you later.
All right.